Perfect. Well, yeah, well, thank you so much for having me here today. My name is Amanda Glazer, and I use she, her pronouns, and I am the lead community outreach coordinator with Metropolitan Family Services CASH Oregon program, or MFS CASH Oregon for short. And ooh, before I jump into this, let me say, so Metropolitan Family Service is a nonprofit in the Portland area, whole wide range of services ranging from early childhood education, hunger relief, senior rideshare. But my program, Cash Oregon, provides free high quality tax preparation to families and individuals earning under $67,000 a year. And we're part of what's known as the IRS's Volunteer Income Tax Assistance Program, or VITA program. So we have over 300 IRS-certified volunteers doing taxes across 19 different tax sites in the Portland Metro, as well as a completely virtual option. And I am here today to talk to you about taxes and specifically going through the basics of taxes. And my whole goal in this workshop is to make taxes less intimidating, less confusing, and hopefully more accessible as well, not only to file, but also in understanding the potential benefits of filing. So some topics we'll touch upon is, like I said, tax basics, who needs to file taxes, why you might want to file your taxes even if you don't have to, some tax tips and refunds. I have some pieces in here specifically for small business owners. Talk about some common tax credits, the filing options with my program, Cash Oregon, and as well as other free tax help that is available. So I always give my disclaimer that I am not a CPA. My degree is in political science. I just go through IRS trainings and multiple certification exams every year for the last 4 years. So I will be sharing the information that I know from my training within that program. But again, just the disclaimer, I am not a CPA. So who do we pay taxes to and what do they actually go towards? At the federal level, that's the IRS. And so that pays for things like Social Security, Medicaid, Medicare. If you are a W-2 worker, that can be withdrawn from your paycheck every time you get paid. Or as a self-employed person, you can either do what are called estimated prepayments, or you'll pay those at the time of filing your taxes. Here in Oregon, we also, sorry, just admitting people into the meeting room. Perfect. So here in Oregon, we have state taxes, of course, to the Oregon Department of Revenue. These would go towards more local public services, roads, infrastructure, schools, things of that nature. And similarly, if you're a W-2 worker, these can be taken out of your paycheck every time you're paid, or you can reconcile those at the time of filing your taxes. And then there's some fun ones like local taxes. And these are neither withheld from your paycheck, nor do you pay them when you actually file your taxes. So this would be like if you're a Portland resident, the Portland arts tax, you get a letter and an email that you file it. Property taxes as a homeowner or a business owner who owns property. And then things like the TriMet self-employment transit tax. So these you'll usually be notified by the agency that you'll be collecting to pay them. So, and those will usually, like the Portland Arts tax, goes towards arts programs in schools, TriMet, public transit, all those good things. So who needs to file depends on how much money you make and how you make that money. So what it is based off of what's called the standard deduction, and that is a specific amount of money based off of your filing status, your family size, that the IRS and Oregon Department of Revenue effectively say, don't worry about paying taxes on it. So for someone who is singled or a married person not filing a joint return, if you are earning more than $13,850, you need to file a federal tax return. Head of household, which is generally a single parent or a single person supporting a dependent, that would be just under $21,000. And then for a married couple filing together, that's just under $28,000. Big thing to note for those of us living here in Oregon is Oregon actually has a lower threshold that you have to file. And when you file a state tax return, you also file a federal. So for those of us here in Oregon, for someone who is single or a married couple filing separately, that's actually $7,710. For head of household, we're looking a little bit under $11,000. Married filing together, just over 15,000. And then dependents, if you have a dependent that is making over $1,300 in income, they can still be your dependent as long as they meet all the qualifications, but there is an additional form that you file to report their income as well. You also might have to might file if you are self-employed and you earn more than $400 in the year. If you purchase health insurance through the federal marketplace, otherwise known as Obamacare, Affordable Care Act. Those are two scenarios where even if you are making under these income limits that I mentioned, you are still required to file a tax return. But even if you don't have to file a tax return, there can be benefits to doing so. One is receiving money that you owed, particularly for folks in the lower wage level. They might not realize that there's a lot of tax credits that you can qualify for. And so by not filing your taxes, you could be leaving hundreds, maybe thousands of dollars in tax credits on the table that you don't realize you qualify for. Also a great way to protect your identity, because if you are filing taxes in your name, no one else can do so without your consent fraudulently. It's a good way to make sure you're in good standing with the IRS, that you don't accidentally owe taxes that you didn't realize. And taxes are also used for non-tax things like FAFSA or financial aid for higher education here in the US, mortgages, business loans. So lots of good things you can do with tax returns. One of the biggest questions that I see both within these workshops and then at our tax sites is, what if I haven't filed in the past couple of years? I've seen that when you have a lot going on in life, it can be easy to miss a year, and then it can kind of get scary to get caught up. And so the good news is you can always get caught up on your taxes, and you can actually even get refunds from the past 3 years that you were due refunds. If you are more than 3 years behind and you owed money, you will still owe money for all of the years that you missed. But your refunds that you're due can help cover that. And if you get tax credits particularly, that could balance out. So moral of the story, it's always better to catch up, and you always can. And if you do owe large balances when you catch up, there are payment plans and there are options available to you. Another common one I get is, what if I can't find all of my tax documents? So this would be your W-2s, your 1099s, your interest statements from your banks. Generally, what we recommend is trying to go back to the source of the tax document first. So that might be your employer, if it was unemployment income, the unemployment department, your bank. And that's generally because they can usually get that to you quicker, as long as you can get a hold of them. Sometimes that's not always possible. Maybe the company shut down. Maybe you're just having the bank moved locations. I don't know, lots of stuff can happen. There is something that you can request from either the IRS or the Oregon Department of Revenue called a wage and income transcript. And that is just a fancy way of saying it's all the information that you need for your tax return. Because when tax returns are issued in your name, they're not only sent out to you, they are also sent to the Oregon Department of Revenue and the IRS. That's how they're able to compare what you submit to them to what they think is right, or correct, rather, based off of the information you shared. I don't want to make it sound like it's a value judgment, but anyway, because they get that information as well, they can issue you that wage and income transcript. We recommend Oregon Department of Revenue first because they will have more robust state information as well as federal, but the IRS can get it to you too. You see I have bolded here, unmasked. In recent years, as a privacy measure, which we love privacy measures, the Oregon Department of Revenue and IRS have been started truncating employee social security numbers, or what are known as employer EINs. So you just want to request unmasked so that you have that information. That's what unmasked means. Another big one that we see, I don't know how pertinent it is to this room, but I do want to mention it in case you or anyone in your life this affects, is big thing is, what if I don't have a social security number? If you're working in this country and whether or not you have a social security number and you have a reason to pay taxes, you can do that. And the IRS issues what are called individual tax identification numbers. And they are just for that, either for workers in this country who don't have social security numbers but have a reason to file taxes, or folks who do have social security numbers but are supporting spouses, dependents who don't. I could go on about this topic forever, so connect with me after this relates to you. But the big thing about this, they are safe. IRS is not able to share this information with any other government agencies. And it's really just a way for folks to be able to file tax credits and accessing their refunds and credits that they are due, regardless of what their citizenship status is. So of course, when you're filing taxes, what you always want to do is get the most money possible, or at least the least that you can. And there's a lot of different things that can benefit you tax return wise. Dependents are a big one. I don't recommend having dependents for this purpose, but they are certainly helpful. Retirement plan contributions, either if you're a W-2 worker through your job, or you are also able to do private retirement plan contributions, excuse me. Owning a home is a big one. Expenses for childcare. So not only having dependents, but if you are paying someone to care for your kids specifically, so you and or your spouse can go to work, go to school, there are deductions for that. Education expenses, student loan interest, tax credits, which I'm going to get all into. And then if you are doing what's called itemizing, there are things like charitable donations and medical expenses that you would have to have in order to itemize those additional numbers for the standard deduction, you'd want those medical expenses and charitable deductions would need to be over $13,000 or so forth. So just some examples of things there. Another thing too, there are things you can do to get your refund to you quicker. The first one sounds simple, but having all your tax documents ready. Like I mentioned, when you're issued tax forms, so is the Oregon Department of Revenue, so is the IRS. And so if there's any type of discrepancy, let's say you missed a tax form, you're not going to get in trouble, but you will get a letter saying, hey, this doesn't match the record, and you'll be asked to amend, and it just draws the whole thing out. We also recommend filing electronically if you are able. That generally changes the processing time from a couple of weeks for an electronic file to a couple of months for a paper file. But that being said, there are some times you do need to paper file, particularly for getting caught up if you are applying for an ITIN, but if you are able to file electronically, do so. Direct deposit is also definitely the fastest and most secure way to get your refund. Again, we're looking at a couple of weeks to a couple of months. And though I do not provide any formal endorsement of any sorts of apps or stuff, I have seen things like Chime Bank, like Cash App, make direct deposit more accessible to traditionally underbanked taxpayers. The most common reason that I see tax returns get rejected at my tax site is because people forget their identity protection PIN. This is a unique, I want to say 6-digit number. Either you can request by the IRS because you're concerned that you might be on a tax return fraudulently, or the IRS will issue to you if you were a victim of identity theft. If you've ever received one, you have one for the rest of your life. And so just make sure the IRS previously used to send out letters with the new numbers. They don't seem to be doing that. So if you know that you've had a protection PIN, you can log onto your IRS account and get the new one. And that's just the big thing there. Again, the return will be rejected. You can fix it, but if you have a PIN, try to remember it. Small business owners and taxes. So this might be a simple one, but in tax term, what is self-employment? In business for yourself. So let's say they're a sole proprietor, an independent contractor, and then of course, if you're part of a partnership that carries out trades or business transactions. The biggest thing for small business owners and taxes, and anyone who's self-employed in taxes, is receipts. Any types of gross receipts, sales receipts, your mileage, if driving is part of your small business or self-employment, anything you can track there, any sort of expenses, any types of interest. I always recommend over-documenting is better than under-documenting, because while there's certain things you can backtrack into, it's just a lot easier to have it on the front end if you can. And so some examples of the types of small business expenses that you can deduct from your taxes: marketing, email marketing, things like MailChimp, Constant Contact, if you're doing any type of mass emailing, social media advertising, business cards, your phones, your faxes, internet, computers, all of that good stuff. Personnel's, of course, contractors, employee wages, all of your office supplies, if you're renting office space, leasing vehicles, and then of course you'll want to mortgage interest on buildings that are owned, business loan interest, all of that good stuff. One thing I want to highlight here is home office expenses and specifically business use of the home. This is it's a cool deduction for small business owners. Also can sometimes be misunderstood. So the biggest question I get is, well, I work from home. Does that count for me? So for me, like me, I'm a W-2 worker. I work for Metropolitan Family Service. I work from home. I don't qualify for this. It's only for self-employed people, and it has to be a designated space in your home where nothing but your business occurs. And there's a whole bunch of different calculations you can do to get that percentage of the square footage of your home deducted in your tax return. So if you have a home office that is only being used for this, track the square footage of the office, the total office, the hours that you're using it. Of course, you'll have access to your rent, your renter's insurance, utilities, but in the first day of business, a percentage of all of those expenses I mentioned, the mortgage interest, the renter's insurance, the percentage that your home office takes of your home, you can apply that to it. Sorry, I'm not explaining the most context, but the thing is, track all of this stuff. There's deductions, but you have to be self-employed, and it has to be a room that's only used for business. So tax credits are one of the ways in which you can see some of the largest refunds for taxes. And what they are is an amount of money that taxpayers can take off of of your taxable income, dollar for dollar, otherwise known as tax liability. And they're based on generally your family size, your income, sometimes specific life things that are going on. And so there's three primary types: refundable, which looks like my slides are cutting off there. Apologies for that, which can reduce the amount of money that you owe and increase your refund. Non-refundable, which can only reduce the amount that you owe. And then a partially refundable is a mix of the two. And so,
hey, Amanda, real
yeah.
quick, we just got a question in the chat about
Oh.
not having a receipt
Yes.
and using a card statement. If I don't have a receipt, can I use a card statement as a documentation for business expense?
Oh, I believe so. Yeah. Physical receipt as in proof of. So yeah, it doesn't need to be a physical receipt there. That's a good question. So do my little refundable versus non-refundable tax credit diagram here. So both are good. Refundable, we tend to like a little bit more because, as the name implies, they increase your refund. And so I've been put together same scenario, but two different types of tax credits. So you're going into this, you owe $1,000 to the IRS. That's what's your tax liability. And you qualify for a $2,000 refundable tax credit. $1,000 is going to pay that $1,000 tax liability, and the $1,000 that's left over goes into your piggy bank. For a non-refundable tax credit, same exact scenario, you owe $1,000 and you get a $2,000 non-refundable tax credit. The $1,000 you owe is still taken care of, but that extra $1,000 that would have gone into that piggy bank had it been refundable just kind of goes away into the ether. So both are helpful, and you'll just kind of see, and I just more bring this up just because you'll see these words as I go through tax credits. So yeah, as the name implies, refundable increases your refund, non-refundable helps reduce what you owe. So some good tax credits here. Let's see. I will say normally I'd want this in a different order, so we'll jump around. But yeah, so in terms of home ownership and taxes, mortgage interest payments are the biggest tax break for homeowners. For married filing jointly, there's interest, all interest on loans up to $750,000 are deductible, and for single filers, all loans up to $375,000. There's additional deductions from itemizing property taxes, electric vehicle charging stations, energy efficient home improvements, and so on and so forth. Now getting into tax credits. So one of the biggest anti-poverty measures in this country is the earned income tax credit. And Oregon particularly is incredibly low in people claiming this credit. And it's a refundable tax credit for working people with Social Security numbers, You must have earned income from the year. So whether that's self-employment, whether that's W-2 work, unemployment, Social Security, none of that counts towards this. You cannot be using the married filing separately filing status. You have to be single, married jointly, or head of household. There is an investment limit of $10,300. But for those who qualify, it can be anywhere from $649 for a single individual with no kids, all the way up to over $8,000 for a person who has 3 qualifying dependents and is at that lower income range. Oregon also has its own version of this credit that it introduced 2 tax seasons ago. And this is a refundable state credit that if you qualify for the federal EITC, you're going to qualify for this. It's usually 9% of that, sometimes 12 if you're particularly low income. And what is cool about the Oregon tax credits, or that I really appreciate, is that this is available for people both with Social Security numbers or ITINs. So not worth quite as much as the federal earned income tax credit, but more accessible and, of course, helpful. There's also the child tax credit, and this is another federal one. This one, for a single individual, you can qualify for this for up to $200,000 of income, and for a married couple, up to $400,000. This is where you see the non-refundable. So up to $2,000 non-refundable for kids under the age of 17. So money off of what you owe. And there's an additional $1,700 refundable for those who qualify. This is another one where your children must have Social Security numbers, but married filing separately does qualify for half. I want to take a moment and just point out, so you'll see under the age of 17, when you're seeing ages in tax credits and stuff, it's not the age today or even the age when you're filing. It's the age as of December 31st of the previous year, because that's when we're filing taxes for. So you can have your kid could turn 17, had turned 17 yesterday. For the purpose of this tax credit, they were 16 last year. So just something to keep in mind about how those ages work. Similarly to the earned income credit, Oregon has its own version of this credit called the Oregon Kids Credit. It is refundable up to $1,000 for up to 5 kids under the age of 6 as of December 31st of last year. It does have a lower income cap. It begins what's called phasing out or getting reduced at just over $25,000 a year. But again, either children can have ITINs as well as Social Security numbers, and married filing separately does qualify for this. Another big one too, and these are actually some of the most specific credits that really don't depend on your income and don't depend on your family size. These are specifically for people who are pursuing post-high school education in one form or another. The big one is the American Opportunity Tax Credit. That one is for undergrad only, must be pursuing a degree, must be enrolled at least half time. You can only claim it 4 times. This one, whether you or if you have kids that qualify for, if you're claiming as a college student who qualifies as a dependent, that would go on your tax return. It's pretty nice tax credit, but not everyone qualifies, and that's why there is the lifetime learning credit, which you can be taking classes at any type of higher education course to get a degree, certificate, or just to improve your job skills. So this could be taking a computer class to improve your tech skills at PCC. I was able to claim this when I did my yoga instructor certification, for example. And so this one, not worth quite as much as the American Opportunity Credit, but a lot more accessible to achieve. And there's no limit to the number of times you can claim it. So if you do any type of educational pursuit that could be related to your job, look into this credit because they very well might qualify for it. It's a very liberal credit in terms of who qualifies. For those of you in the room who might have someone in your life a dependent typically, who might want to go to college, Oregon has what's called the Oregon College Savings Plan, which is both a savings plan for college and a tax deduction. And so there's no cost to do it. Anyone can open it, no income limit. And the whole idea is to provide a tax-free way to save money for college. So no tax on the contributions that are going in, unlike if you were to pay it, if you were just put it into a normal savings account from what you get paid. And if it's used for qualified educational expenses, no tax is taken out of it that way. There's also a income tax credit of up to $360 for having one of these. And those are available OregonCollegeSavingsPlan.com. It's just a cool way. Not all states have this type of a savings plan where you can both put money away for college and also use it as a tax deduction. Similarly, Oregon also has what are called ABLE accounts. And these are, again, tax-free savings accounts specifically for folks with disabilities that were diagnosed prior to age 26. And these exist because having a disability can be very expensive. And folks were running into that most of their income was going to their medical expenses, yet they weren't qualifying for additional assistance like SNAP, like supplemental security income. And so we're really just not able to meet their basic needs and take care of the medical expense related to their disability. So Oregon created these ABLE accounts, and the whole idea is to be able to put money for things related to the disability. So it could be education, housing, transportation, into a tax-free place that does not get counted when you are applying for things like SNAP, like SSI. It's a really powerful plan, has made a huge difference for the people who have been able to take advantage of this. And you can save up to $17,000 a year in one, potentially even more if you're working. I do make the note that the supplemental Social Security income might stop at $100,000, but otherwise, yeah, these are really valuable. If they don't apply to you, keep them in mind maybe for someone else in your life. This is just a real quick note there. Unemployment. If you ever find yourself in unemployment, it's taxable. I know it sounds simple. You might be like, I knew that. A lot of people don't. I've seen it a lot at the tax site. So I just kind of threw a slide in here that if you are ever find yourself on unemployment, you're supposed to get what's known as a 1099-G. If it doesn't come in the mail, you can log on to the portal where you were entering your job search activities and get that there. And if you do find yourself on unemployment, applying for unemployment, and you have the option to select having your taxes taken out, I would recommend doing so. There might be reasons why you can't, but I would recommend doing so because, yeah, I've broken that news to a couple of taxpayers.
Hey, Amanda, just real quick, we've got another question in the chat about higher education. Does that imply only accredited institutions, or could it mean something more?
For the American Opportunity Credit, yes. For the Lifetime Learning Credit, there can be more there's more flexibility there. I mean, I don't think you could, I don't think paying a friend of yours to teach you Spanish would necessarily count. But I think there is more, a certificate program, something like that. I think there's much more flexibility there.
Awesome. And thanks, Charlie, for asking that question. I was wondering that too, so glad you asked.
Yeah, no, thank you. That's a great question. Need continuing education. Yeah, that definitely, yeah, card. That sounds like that would lifetime learning. Yeah, a lot of flexibility there. So I want to give, I know I'm speaking to a room of small business owners, self-employed folks. I do give the qualifier that my program, we're not able to, we do have a lot of limitations around small business and self-employment tax returns. The scope for our service is decided by the IRS's VITA program. So I'll be talking a little bit about us. I'm going to also mention some other options, but I do just want to be candid that as much as I would love to help everybody, you may end up ending up with some of the other free options there, but I'm still going to talk to you, and I still hope that we can help you to some degree or another. So the income cap for our program is $67,000 a year or less this year. Same for an individual as a family. As I mentioned at the top, we have over 300 IRS-certified volunteers across our 19 tax sites. We work with not only live interpreters, but we work with another nonprofit, the Immigrant Refugee Community Organization, or IRCO, to do over-the-phone interpretation in pretty much any language you can imagine. And then we also have a completely virtual tax preparation option where you can upload your documents through a secure portal on our website, and a virtual volunteer can prepare your tax return within 2 weeks, and they'll be in touch with you via phone, so you're involved in that process. Just adding a little bit more. So like I mentioned, the income limit is the $67,000. We're not able to touch returns with income from rental property. So Airbnb, Verbo, all that stuff. Very specific type of what's called 1098-T. It's for college students. There's 2 boxes on there. If there's anything in it, we can't touch it. Cryptocurrency, sale of cryptocurrency is out of scope. And then self-employment when there is inventory, where there is business use of the home, employees, a business loss for the year. Those types of things are out of scope. What I do have, and hopefully we can send this out after, I put together a quiz, a do I qualify quiz on our homepage, completely anonymous. It just goes through the scope questions one by one. So if you're not sure if you qualify for service, that'll help you determine that. So assuming you are getting your taxes done with us, I'm not going to go through everything here, but there's a list of the tax prep checklist. Please review that. We can always, if someone is missing documents, set you up for another appointment. But the most common reasons we do end up having to have folks come back a second time is because they don't have their photo IDs or their social security cards. So please review this if you're going to get your taxes prepared with us. And if you have any questions ahead of time, you can always reach out and let us know. And these are 2 options for accessing free high quality tax preparation software so you can file your own taxes. There's a lot of them out there. These are 2 that my organization finds particularly reputable and feels comfortable endorsing. Of course, there is a slew of other ones out there, but the 2 I talk about, My Free Taxes is great for simple tax returns. So not able to do anything with Schedule C, but if you are under $84,000 of income, do a simple state and federal return. That's really good quality software. They have good support, all that stuff. And then there's also online taxes, which is for adjusted gross income of $14,000 to $69,000. This one, you are able to do more complex returns that would include that Schedule C, but there is a fee to file the state return there. The federal one is free. And just as the caveat will say, yeah, so this is free. I wish I had more resources to share with you. There is definitely a lack of free filing software available to small business owners, as many of you already know, but hopefully one of these 2 options could be a good one for you. There's also sometimes people need help with tax things beyond just the actual filing of the return. And so there exists what are called LITCs, or low-income taxpayer clinics. They are teams of tax lawyers who donate their services for free. Generally speaking, if you're within the income limit for our program, you'll be in the income limit for them. Scenarios where we'll refer folks there. A big one is large balances due. Someone owes a lot of money and even the payment plans aren't going to work for them, but they could qualify for different hardship deferrals. We can set them up in an appointment with here. If there are disputes over dependency, that's a big one. So parents are no longer together. One parent cares for the kid primarily, goes to file the tax return with the kid as a dependent. Return gets rejected because other parent claimed them instead. The LITCs can help with that sort of stuff, things of that nature. I think those are the big ones. I think those would probably be the big ones, the large balances due, the dependency issues, but we can refer folks there if during the appointment as well. The IRS also has an independent mediary arm called the Local Taxpayer Advocacy Service. They're there less to help you with tax legal stuff and more if you're just having trouble resolving something like a missing refund with the IRS, for example. You filed your taxes 3 months ago, you're using the Where's My Refund tool, it's not showing anything. The Local Taxpayer Advocacy Service can help with those sorts of scenarios. And then that is the end of my formal presentation here. I know you guys have been asking great questions all along. If there are any other questions, and I also have my contact information here too. Oh, wow, I just ran through that. Sorry.
Thank you. That was all really helpful.
Okay.
I
Yeah.
have a few questions if that's okay.
Yeah, please do. I went through that much quicker than I intended to.
Well, good job.
Thanks.
It's good to keep things concise, I think. Um, so I'm going to be hiring some subcontractors for the first time this year. And I noticed in the refund section, you put out of scope, but there are people who do the same thing that I do. I just need more of them. Would that still count or no?
The part where it gets out of scope is basically the employee or having the employees or the contractors. So we would probably be able to do their returns, but not you as the person who is issuing. Yeah. And
Okay.
I guess actually let me ask you this. Are you because technically the point at which you would be required to report income is $500. So I'm wondering if if the contractor paid less than $500, we may be able to get around that.
Um, One or two of them maybe, but most of them I pay more.
Okay,
Pay
well,
more.
good. Which is very good for you and good for them. But yeah, no, unfortunately, that would be out of scope for us.
Okay, that's super good to know. I'm pretty sure I'm out of scope anyway for you, but it's good to know that this thing exists. And then I just want to double check. I know Charlie mentioned the lifetime learning credit um, being accredited institutions or not, but I need a lot of continuing education for my license, and it's just like everything from like webinars to in-person classes. What exactly is not covered under the lifetime learning?
Um, it's a good question. Let's see, I'm trying to think. I'm saying most of it, yeah, most of it is. I would need to kind of hear specific examples, but what I can do, since it sounds like there's a lot of interest in that, I can put together some more resources to send out after, with sort of specifics there. Because if you have specific examples, most expenses that are related to things like continuing your license would qualify for. But I can definitely put together a document with some more specifics because yeah, it's pretty broad. Oops, my standing desk is, yeah, it's pretty broad and person specific, but I'd be happy to put together some more resources.
Okay, thank you.
I think Genevieve, you had a question, right?
Oh yeah. And Genevieve, did you have a question?
Actually, Genevieve may have
Oh, left.
left.
Okay.
Yeah, so I guess not.
Like I said, my information is here. Sounds like I will be definitely send out the slideshow. It also provide some additional resources on the lifetime learning credit for some more specifics there. Also have my contact information. So if you'd like to reach out to me, the contact information on top is really specific to the cash admin team and getting appointments. But my information is right there too. So yeah, thank you very much. And again, I'm sorry I breezed through that so quickly, but hopefully there was still some good information here.
That was great. Thank
Thank
you,
you.
Amanda.
No problem.
That was awesome. And thanks everyone for joining. I know a lot of you joined like right as we got started. So thanks for being here. Yeah, we will send a follow-up with the recording of this as well as, and Amanda, if you want to send us the resources, we're happy to pass those along too.
Yeah.
Cool. So I'll make Janine aware that we'll just hang tight on all this stuff until you're able to shoot that over. Yeah, and I hope to see you all again soon. Next week, we have Michelle Lagos with a Be Found online session. And then on the 4th of March, I can't believe it'll be March soon. we have Jason with Growth Architect, the 5 E's of building your dream biz. So yeah, and then much more to come. But if you haven't checked out the calendar, please do. And you'll have some of that info in the follow-up email as well. Yeah, that's it. All right. Have a good rest of your day, everybody, and week. Oh, also, if you want to present and you're not signed up, do it. You'll get a fun email from me and we'll chat about it. Okay, bye.
Thank y'all.
Bye, everyone.